Well, there's no question that we're in a bubble. The stock market, bond market, real estate market, contemporary art market are all very much in bubble-like conditions. And this has been financed by the Federal Reserve's cheap credit policy. And basically, the entire economy has been leveraged up on the basis of these artificially low interest rates. And that's something that Trump, did not have a hand in, and he can't really do anything about it.
Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amadori, and I'm joined today with Mark Thornton. He's the senior fellow at the Mises Institute. And you know what? The Mises Institute is by far something you've come across absolutely if you're into Austrian economics and really in the alternative media. And I'm really honored to interview Mark today. He's recently submitted a manuscript for a brand new book, The Skyscraper Curse. He serves as the book review editor of the Quarterly Journal of Austrian Economics. He's got quite the career, and he's been featured on a number of major news outlets such as Bloomberg, The Economist, Forbes, and many others. So we're going to get his thoughts today on current events and the economy. Mark Thornton, thanks for joining me today.
Kenneth, it's great to be finally on Crush the Street.
Hey, well, I appreciate you taking the time, and I appreciate your time. Let's get right into some of the current political events going on right now. Republicans just released a bill that could replace Obamacare. Now, Senator Rand Paul described it as Obamacare light. And in many ways, from what I've heard, it's still a socialistic system. We're not talking about a free market system. And, in general, when we talk about politics, the right and the left, the left describes the right as this far extreme free market party. But in reality, that's not what we have. And I'm wondering, just let's start off here. I'd like to get your thoughts on what you think about the new bill, if you've had a chance to look at it. And do you think it's just going to prolong the inevitable implosion of what Obamacare was already doing?
Well, I'm hopeful that you will get some good out of the new proposal, but it does seem like most of the features of this new bill exist in Obamacare, and so it's not likely that this bill is going to make health care and health insurance an uncomplicated matter. Obamacare made things much more complicated, much more difficult, and much more expensive. Again, I'm hoping that Trump and the Republicans can improve this, but it really is the case that healthcare has become just a very complicated mess, and unless they resort to real free market reforms and get the bureaucracy out of healthcare and health insurance in particular, I don't see much hope. I don't see much improvement, certainly not enough to reverse the trend even. I mean, what we could do is simply give people tax credits, unlimited tax credits for catastrophic health insurance, and give people tax deductibility, unlimited tax deductibility, to put into health savings accounts. It's not the perfect answer, but it solves the insurance and the access problems with health care, and then also puts the consumer in charge. So the consumer, when they go to the doctor, they go to the hospital, their health savings account, that's their money, and they're going to want to know how much something is going to cost. And because of all this confusion in healthcare, I've been exposed to real prices that they're charging, and it's truly outrageous that a pharmaceutical company wants to charge you $150 for something that only costs $4, and that's the kind of thing that we need to correct and to bring down the cost of healthcare and actually to encourage people to stay healthy rather than just relying on health insurance.
Sure. Encourage people to make productive decisions and not rely on the government, which doesn't really incentivize that. I want to get back to just the direction, the trend, and something you mentioned, and the political arena right now, the right versus the left, free markets versus some government. It's really not that. It's really not free markets versus some government. We've moved much beyond that. It's maybe the discussion is some government versus a ton of government. And we seem to be trending towards more and more and more government. Can you speak to this at all? And, from the research that you've done and the experience that you've had, watching this all unfold?
Yes, the trend towards bigger government is still in place, and it's still an imposing trend of higher budgets, more regulations, more greater national debt. All of those problems are continuing to get worse, and President Trump is promising to basically to continue to make those situations worse. And that's very, very unfortunate. The good thing that I see, the very positive thing that I see, and I think that's been made clear to everybody, is that voters trended towards Bernie Sanders and away from Hillary Clinton. So they trended on the left towards a more radical, less establishment-oriented character. People on the right gravitated towards Donald Trump to an amazing extent. And he defeated, more than a dozen establishment candidates in the Republican Party, and won the nomination and won the election. And so people were definitely trending towards unorthodox, anti-establishment, and they weren't even attractive people. They were people who would otherwise turn off most Americans. And so I think that's the good trend, is that Americans have increasingly realized that they're being duped, they're being taken advantage of, they're being lied to, and so people are turning to alternative candidates. And these are not great candidates, but at least they're alternative, anti-establishment. And people are also turning against the media, the mainstream media, and turning for news with programs such as this.
Sure.
And our readership and viewership are up considerably every year for the last 10 or so years. It's been significant increases year after year, and I think that's a trend that's also in place that has the establishment worried. I think we just need to keep pushing in that direction.
Sure, and I totally love what you brought up there, and that's the people waking up, essentially. That's what I heard, is that people to a larger degree are waking up. I want to switch topics here for a moment and get your thoughts on this. There's a lot of controversy right now about open borders versus a wall, and a lot of different views within even the libertarian Austrian economics mindset on this. People like to compare immigrants of the 21st century, what we're seeing now, to those that came 100 years ago, a couple hundred years ago. And what I try to remind people of is that those that came prior had one option, and that was to produce and contribute or fall by the wayside. And today, immigrants, legal or not, are statistically ending up receiving entitlements, which makes no sense from a general policy of immigration, in my opinion. But as an Austrian economist, given the current situation of what our government gives to people and offers, what are your thoughts on this subject?
Well, this is an issue where there's a lot of disagreement within the Austrian school. Typically, Austrians are for free immigration and free movement of people, free movement of capital, free movement of goods, and that the border of a nation shouldn't be a stopping point or a blocking point. The problem arises, however, as you mentioned, the fact that not only are they attracted to jobs, but they're also attracted to all of the free government benefits that accrue to everybody without any kind of check. And so not only can you get a higher paying job in the U.S. than poor South American countries, in African countries and other places, but you get free health care, you get free public education, you get free police services, in the sense that violence in the United States is much less than violence in, say, for example, Central America. And so there's all these free benefits which are also attractive. And it's basically big government that, gives out free education, free health care, free security, food stamps, etc. And so that's where the problem arises. We don't want to be attracting people because of those benefits. Sure. And unfortunately, that's the way the system is, and there's no movement to correct it. There's no movement to actually make immigration a rational process where if you meet certain requirements, you can come into the United States, you can accrue a reputation and become a citizen. There should be a logical process, and we shouldn't be diverting our immigration quotas to certain places and not allowing other people to come in. So I think that if we create a legal, rational process, because we need immigrants. If we don't have immigrants, quality immigrants, we're facing a demographic disaster that includes the bankruptcy of Social Security. So it's vital that we increase our population, and domestic population growth is insufficient. So we need these immigrants. We need them as workers and as taxpayers and so on and so forth. But the current political stance is against a rational reformulation of policy that makes immigration profitable and makes it logical and makes it legal. Those are all things that can actually fairly easily be accomplished.
So you brought up certain things, and I agree with you 100%. I would love the idea of, immigration and all these different things if there wasn't this magnet of an imploding entitlement system on the backs of taxpayers. And that's all a major cost for the producers in this country. And what I try to tell people, too, is how much we've incentivized capital to flow overseas over the last, let's say, 50 or 60 years, and how we've basically helped other countries compete with us, compete for our workers, compete for our capital, driving down wages here in our own country. And I would attribute the fact that this generation of millennials are graduating high school and college poorer than their parents, and why so many young people are struggling now because of mindless policies and even immigration. It's one factor that is hurting the country and really degrading the infrastructure of our economy. And so I largely agree with you on that. A lot of people are panicking about Trump withdrawing from many of these one-size-fits-all free trade deals with foreign countries. And he wants to start negotiating deals individually with each country. And maybe it's a tariff for some countries or what have you. But is this a good idea in your opinion? And again, it comes down to the fact that we really don't have free trade within our own borders. With it because of Obamacare and high taxes and all these different things, and burden the employers here. How are we supposed to compete with other countries with this one-size-fits-all free trade?
Yeah, that's a big problem for the American worker, is all this government regulation and big government and taxation to begin with. Our labor market is very sticky because of extensive government intervention, and then the macro pressures that you alluded to that have seen median family income on a slow, steady decline for over 15 years. That's a major, major problem. With respect to Trump's trade policy, that's mostly bad, but free trade is a unilateral thing. A nation decides how much of a barrier they're going to put at the border to prevent goods coming over the border. And so that's a unilateral policy, and that's the best policy. That's what led to, in many respects, the Industrial Revolution and the rise of our standard of living. And so these group trade deals like NAFTA, that's not free trade. It's some lower barriers, but it also creates higher barriers to countries outside of that bloc.
Right.
And that actually is a very dangerous thing. You don't want trading blocs, and this is the way the world is headed, where you have NAFTA and you have the Pacific Trade Treaty and other groups, China doing the same thing. That's a very dangerous thing because it leads to conflict. It can actually reduce trade more, and it can lead to military conflict or trade wars, all of which are bad. So Trump's stance against these group deals is actually free trade. It's just what he wants to put in place of it with unilateral deals between countries and higher barriers. That's not free trade at all. So he's in general a protectionist, but that one thing about not liking these group deals is in his favor, although it's not in his heart at all. And he doesn't seem to have any grasp of economics. He has a good grasp of entrepreneurship and what it takes to get projects done, but that talent does not translate very well into economics or politics. And so that's a good reason to be concerned about a Trump presidency. It's not just his personality disorders or his personal behavior, which seems very erratic and unexplained by him or anybody else. And so I'm very concerned about international trade during the Trump administration.
Well, I'd love to discuss, the impacts of, what you see happening in the economy here going forward. We know that Trump has no filter, and he said that our economy is in a bubble. He has acknowledged that, and I tend to agree with him on that. What are your thoughts on the economy and maybe what you think might happen with Trump as the president?
Well, there's no question that we're in a bubble. The stock market, bond market, real estate market, contemporary art market are all very much in bubble-like conditions. And this has been financed by the Federal Reserve's cheap credit policy. And basically, the entire economy has been leveraged up on the basis of these artificially low interest rates. And that's something that Trump, did not have a hand in. And he can't really do anything about it. I mean, I could set him up with a set of policies that might mitigate some of the pain, but basically we've created this bubble at the Federal Reserve, and we've made a lot of investments that otherwise wouldn't have been made. We've changed corporate and bank balance sheets in a more risky, dangerous way, and that's all going to have to be paid for. And I think we can see due ahead in the not too distant future is that the economy and financial markets are going to be very shaky, and I would be I don't think that they can continue to inflate this or reflate a downturn. at this point. I think there's too many people that suspect, unlike in the past, what the Federal Reserve has done. And so I think there will at some point be a rush to the exits. And of course, it's not clear to me how significant the crash is going to be or when it's going to take place, but certainly all the preconditions have been strongly established to indicate that we have problems coming in the future.
Yeah, I tend to agree with you. Mark, I'd like to go back to, the economy here with jobs. And it seems like Trump is doing a good job in incentivizing businesses and convincing them that there's going to be lower regulations, lower taxes, and a more friendly environment here in the U.S. For them to operate here. And I want to get your thoughts on what is, if you can expand a little more on what is the threats or what is the problem with protectionism. And I know it doesn't have so much to do with that, but explain to us a little more. What are the long-term problems with protectionism, as you called it?
Well, protectionism prevents poor Americans from buying cheap, inexpensive goods at Walmart. And so we're hurting ourselves to a tremendous degree if we put up barriers, we put up tariffs. That's all going to have a negative effect on American consumers. And, that's the great benefit of freer trade, is that you create jobs, you make the economy more efficient, both here and abroad, and you lower prices to consumers. And so we've been the great beneficiary of trade with Mexico and trade with China. Now, of course, some people have lost jobs in manufacturing, but the amount of manufacturing and the value of manufacturing in the United States has not gone down. It continues to increase. It's just that we're manufacturing things that we're more efficient at, higher value goods. And a good case study is the iPhone. The iPhone is the ideas and the design and all of that takes place here in the United States. Parts are made in the United States and places like South Korea and Japan, and all those parts go to China to be assembled into an iPhone. And then they're sent abroad back to the United States, where the marketing and the apps and all the add-ons and service is done here in the United States. So in America, we do all the higher valued items at the beginning of a production process and towards the end of a production process to sell the goods, to do the marketing, and to do the after service. The only job that's done in China is the assembly work, and that is not highly paid. But because everything is done as efficiently as possible, the result is that the iPhone, which is amazing, can be put together and sold at a price that Americans can afford. And so those are the kind of things you don't see, you're not told, but it's directly responsible for extending our standard of living in a very, profitable and positive way. I mean, the iPhone and other smartphones are just absolutely remarkable for what they can do and how they can improve our lives and make things just easier all around. And that's the result of trade.
And I understand that. That actually makes a lot of sense. But I'm also wondering, too, about, someone who's, let's say, had a factory job and that job once was in Michigan or Ohio or something like that. And because we made it too expensive for them to want to do business here in the United States because of unions or certain things that were not necessarily all free market, we incentivized that business to go overseas. And that's a net loss for the person who would have had that job. And we've created an opportunity over the ocean that didn't necessarily need to happen.
Well, that's certainly true. I mean, it's not a everybody wins proposition, because when you go from protectionism towards freer trade, people are going to be hurt in the process. We have a very good example of all this right here where I live in Alabama, where with NAFTA, eventually all of the textile firms shut down, or almost all of the textile firms shut down as a result of that. And it was a very painful process. People, who were in mid-career were very adversely affected, and it's a heart-wrenching situation. If you're not young enough to start over, or if you're old enough to retire, fine, but the mid-career people really got zapped. Now, what has happened as a result of that is two positive things. One is that our economy has been re-engineered and rebuilt so that we have two major automobile assembly plants in our area, and we have dozens and dozens of part producers and part warehousing firms in existence here. And so the textile jobs were replaced with better paying jobs eventually. And in the meantime, consumers got access to textile products at a much, much lower price. Everybody, it's not just those workers, obviously, but it's everybody got lower prices for blue jeans and bras and tablecloths and linens and towels. The prices of all those things in real terms has come down dramatically as a result of freer trade. So the benefits are comprehensive, and even in the labor force. The problem is that when you go from protectionism to freer trade, some people are going to be left hanging to dry. And, we tried to do remedial policies, but it still remained unfortunate. And so our goal should be to get to free trade and to stay there and see our standard of living continue to increase at the fastest possible rate as the world economy becomes very, very efficient at producing goods and services.
So are you of the belief that if the economy runs as efficient as possible, the global economy, everyone's standard of living can go up at the same time, or does someone have to suffer at the expense of someone else?
Well, the suffering occurs from the mid-career manufacturing worker who is displaced as a result of lower tariffs. So it's not a perfect scheme, but if we look at things in terms of nations, we can certainly see that the Chinese people are incredibly better off now than 25 years ago.
But would you say that the U.S. lost some of its standard of living and gave it to the Chinese as we've lost some of our competitive edge?
Well, not because of trade. I don't think that that's the case. As I said, obviously some workers are going to be displaced and not be able to be resituated into the economy, but overall, the Chinese trade with China has greatly reduced the prices of the goods and services that we consume, and they import a ton of products from the United States as well, so that both sides as nations are clear gainers. It's just that obviously some people are going to be hurt in the process. Not all the people in China are happy with certain policies of their government as well. So there's displaced people everywhere as a result. But clearly the aggregate trends as a result of freer trade and more market-based economics has seen the world economy improve dramatically. We've seen the number of people in poverty fall by hundreds of millions of people, and so the overall picture is clearly positive. And if we had free trade all along, there wouldn't be any negative consequences where we find these displaced workers who can't be resituated. And there's problems with our economy that, as we talked about earlier, suppressing the real median family income. We've got obvious problems with corporate tax policy. We've got companies moving abroad. We've got people giving up their citizenship in the U.S. So there's obviously a lot of problems that I'm aware of and that I'm not aware of that need to be fixed, including the corporate tax and all sorts of tax policies that is leading people and companies to move overseas. That's a sure sign that you're doing things wrong, and you're doing things more wrong than other countries are. And so it's a clear indicator that things need to be fixed with finance policy, monetary policy, and regulatory policy. We should have an economy where people don't feel like the debt, the taxes, the regulations are so severe that they want to leave this country. We always want to be the country where people and capital want to come to and invest in. And if we see evidence that that's not the case, or we see companies moving overseas because of tax policies, then we need to fix something.
Well, I couldn't agree with you more there, Mark. Mark, before we let you go here, I want to get your thoughts on investments. Obviously, it's kind of a crazy market right now. What would you give someone in terms of general advice, with minimal options out there? The stock market is all-time highs. The bond market is in a bubble. What do you like nowadays?
Well, I certainly don't like the stocks that are clearly in bubbles. You look at some of these stocks and you've got to wonder why they're $700, $800, $900 a share. Those are outrageous valuations, and you have to remember that a lot of companies have refinanced, have gotten financing for share buybacks, and so they've created higher earnings per share by doing that, but they've also taken on a lot of debt. So I would definitely avoid any company that has taken on a big amount of debt in order to expand or to redo its capital structure and then taking on more debt. So those are things I would definitely stay away from. And I think bonds could be a problem as well. This might be a time to look at markets that are suppressed. I don't follow the Russian stock market, but I would imagine that it's highly suppressed relative to other stock markets. I would stay away from Europe for right now.
Are you talking to the Russians?
The euro may be okay, but the European bond market and bank market is, I think, in serious bad shape. I've always been a believer in holding gold and silver and accumulating it over time. Right now, it's a little shaky right now, primarily because the dollar has been strengthening, and there's the prospects of Federal Reserve interest rate hikes, both of which are bad for the gold price. But typically, I accumulate, gold and silver, and occasionally I get into the market of buying precious metal miners. It's a very volatile situation, so you don't want to put all your eggs in one basket. But normally, I would, recommend a more normal portfolio with the S&P index fund and Vanguard mutual funds and cash and bonds and a portion of investment in precious metals. But it seems to me that it's the precious metals and cash that have a lot less risk associated with them, despite the volatility, than stocks And the potential is there, obviously, with bonds. We've seen a big pullback there in government bonds, and that may be just the first step in a lower market for government bonds. Given Trump's promise to spend more on infrastructure, spend more on the military, and and other things as well, that could increase the supply of U.S. government bonds and bring down its price going forward here. So I'm wary of that as well. Usually you can count on the U.S. government bonds to be very stable, but right now that you can only look at the short-term bonds as being stable, and they basically give almost no return.
Sure. Mark, I know you have a new book you were a part of. Please share with the audience a little bit about this book and what readers can expect to find in it.
Yeah, well, it should be out later this year from the Mises Institute. It's called The Skyscraper Curse, and I've been writing about the skyscraper curse for over 10 years now. And basically, the skyscraper curse is the unusual correlation between the building of a new record skyscraper and an economic crisis. And basically, I've been able to chronicle these new record high buildings back into the 19th century through the 20th century. And then, of course, in 2007, the Burj Khalifa Tower in the United Arab Emirates set a record in 2007 when the economy worldwide was doing great and everybody was happy. Unemployment was incredibly low. But I used that new record to call for the possibility of an economic crisis going forward. And sure enough, at the end of 2007, we started to see the first cracks in the mortgage market and other markets. And then as we got into 2008, of course, the Fed unleashed seemingly unlimited number of unconventional monetary policies to try to reflate the economy. And of course, it didn't work. We only ended up in the financial crisis and stagnation ever since. But basically, it's a good correlation between the record-setting high skyscrapers and economic crises. Basically, all of the economic crises over more than 100 years. And right now, they're building a new record-setting skyscraper in Saudi Arabia. It's called the Kingdom Tower or the Jeddah Tower, and it's actually being built out in the middle of the desert. But it's designed to be a kilometer tall and to surpass the previous record by about a dozen stories. So right now we're looking at that. We're keeping an eye on that. It's going to be a while until they get to that record height, and then of course it may be up to 2 years before they actually finish it up and open it to the public. It's a very expensive project, $1.2 billion. And so we definitely have a cautious outlook with respect to that. I just hope I can get the book. My part of the book is done. I'm just hoping the publisher can get it out there to the American people.
Well, soon. To reading it. And Mark, I really appreciate you coming on the show with me today. If people want to learn more about the Mises Institute, please let them know where they would go and if they can sign up for anything and upcoming events. Yes,
it's just mises.org, and you can email us, you can call us, you can become a member. All of our content is available for free, 24/7, 365. We have a great bookstore that has the entire literature of Austrian economics and free market economics at subsidized prices. And we have conferences for all sorts of demographics. What we have coming up this weekend is the Austrian Economics Scholars Conference, and you can actually go to our events page and view the speeches, the headline speeches that are going to be given there on Friday and Saturday. We have all kinds of conferences for people all over the place. Most of them are here at Auburn, Alabama, and so we have something for everybody, basically, and it's economics that is based on logic and common sense, and it's written in a way that anybody can understand it. So, your first stop should be to go to mises.org, or you can see us on Twitter at MISES. We have a Facebook page and all sorts of social media. So it's an exciting place, and it's a place to learn about the traditional form of economic analysis that is no longer taught in college. It's not used at the Federal Reserve. And Paul Krugman of the New York Times is the polar opposite to the Austrian. He's a Keynesian economist. And so you're going to get something brand new, and I can guarantee you it's a true form of economic analysis that I think your listeners in particular will really like. Mm-hmm.
I love it. Mark Thornton, everyone. Mark, thanks for coming on the line with me today.
Kenneth, it's great to finally be on Crush the Street, and I look forward to doing interviews with you in the future.
Absolutely, sir. Thank you.